Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Chris Englebert, Founding Partner and Chief Investment Officer of Englebert Financial Advisors, LLC, to discuss what financial advisors should be doing this summer for their businesses and clients with the resurgence in COVID-19. Chris, it's great to have you with us. Welcome back to Trade Talks.
Great to see you, Jill. Thank you very much.
And there's a lot of variables out there, and 2020 has shaped up to be wilder than any of us could have predicted. With so much to choose from, what are retail investors most concerned about?
Well, there's three big fears that investors have now. I mean, we're talking to retail and institutional investors every day. And so I wanted to distill down for our broadcast today the three main fears that people have. And obviously the first one is the COVID and the resurgence. What does that mean? What do they do about it? The second one is the urban demonstrations going to come to the suburbs and also the rural areas. And then the third big fear is the elections and what's going on. So I want to kind of address each one bit by bit. The point that I want to make about the COVID and the resurgence is that it's a lot of education. I mean, there's a lot of false information out there right now. But one of the things I do as part of my job is I'm always on calls with investment managers. And I had a really good call last week with a very good biotech manager who was very positive and talking about the fact that he believes that there's not going to be one or two vaccines available by the fall, but 8 or 9. And this week we saw the market pop aggressively on one company's information about the antibodies and being positive. So I think we're making the turn, but again, that's still a major fear.
Yeah, well, you also have to have people that are willing to take the vaccines as well. There's some concern out there that this has been super fast tracked and that we don't have enough science and data behind it just yet, but certainly fingers crossed. So, Chris, what should advisors be doing with their businesses and clients over the summer with COVID-19 surging again? I'm sure you're getting a lot of questions out there. The market doesn't kind of look like what the economy is showing.
Yeah, and so what's happening again, like the three fears I've been pinpointing that we keep hearing about over and over. I think really what an advisor has to do is he's got to be very level. He or she's got to be very level, measured with their answers. You have to address your client's fears and say, I fully understand what you're talking about, but here's some of the things that are counteracting what you have to say. So I pointed out about educating on the COVID and what's going on there. I'm also pointing out the question we're beginning to get, and it's going to come a lot faster, is what about the elections? And so I'm trying to be very measured in my response and saying you got to remember we have a major election every 4 years, and right now we're seeing extremes on both ends where if one candidate's elected, the stock market's going to come down by 50%. If the other candidate's elected, you're going to have this, a huge civil unrest or an upheaval. I just want to remind everybody that, 4 years ago, 2016, the day after the elections, everybody got up, they, turned on their TVs, they had their coffee, and, we got past it. So the point that I really think that advisors have to, keep reminding their clients is that to make a major asset allocation change based upon one particular event could be much more detrimental to them in the long run. And so we're trying to have people, keep calm. Obviously investors are keeping a lot of cash out there on the sidelines. And if that's what you need to sleep at night, that's fine. But remember, we see these events come and go, and I keep bringing up, and you probably remember, I keep bringing up the analogy of Y2K. I mean, in 1999, the 4 or 5 months before Y2K, everybody's like, oh my gosh, we need to get new computers, the grid's not going to work, et cetera. And when we woke up on New Year's Day, maybe a little hungover, we turned on, the TV, everything was fine, and we kept on moving forward. So I really think advisors have to have a much more measured and be a voice of reason out there, from the standpoint of what's going on.
Yep, I remember that. I had to work on our desk that overnight from December 31st, 1999 into the next day, just in case anything happened. So here we go, outdating myself. But Chris, let's take a look at a couple of charts here and discuss, what's kind of happened over the past month since you're on last. We'll start with the S&P 500. Yeah,
S&P 500, is the question is, we're only a couple of ticks from all-time highs. Again, those three worries that I told you about that, investors are concerned about, the market literally is climbing a massive wall of worry. And the question is whether or not the S&P is going to make new all-time highs this summer. I would not bet against it. We've just been able to recover and roll along. One of our theses is that, and we're going to talk about this next, that, the value versus growth, and that there may be some change in leadership coming up here very shortly.
All right, and speaking of growth versus value, let's first take a look at your chart of the Nasdaq 100. While it has been under pressure this week, the index is still up over 2,000 basis points relative to the S&P 500. So let's take a look at that first, then we'll get into growth versus value.
Yeah, explodes on the upside. The COVID trade, obviously the big names have been powering it much, much higher. It's gone higher than I think anybody, including myself, thought it would at this particular point in time. But again, this week might have been a pivotal week, because some of those names seem to be overextended, and we are seeing valuations, reach very lofty levels at this point in time. And you and I should keep a running tab of what we talk about, because last summer, there was that August period in August where it looked like, growth was going to finally die off, and then it resurged, and then, the COVID trade, really powered growth higher. And then the first week in June, we saw, the banks and the energy companies really start to turn on, only to collapse. And then that leads us obviously into our next chart.
Yeah, the growth versus value chart. And by the way, anyone who is catching this on the replay, we are talking about the week of July 13th. So that's where we are right now in the cycle. And let's take a look at growth versus value, because Chris, as you always say, it could be a trade. You've made a lot of money on your Nasdaq 100 stocks. You're taking a little off the table. You're putting money into the beaten down financial and energy names. That might be a trade, but longer term, that's where you have to think about where you want to put your money. So it's all about timeframes too.
Yeah, absolutely. And so one of the things that we're trying to point is that there's been a lot of money chasing large cap growth names. And I keep coming back to looking for the catalyst as far as what's going to get value stocks going. And, we made a call last week where we said, the turn could be coming because the banks are going to be reporting earnings, and banks are typically associated with value names. And this week we've had bank stocks explode higher on huge trading volume and really good earnings. Well, they also pay a really good dividend too. And the same thing with the energy stocks. So, I keep coming back to the point that, the 10-year treasury is at 60 basis points versus a basket of value stocks is at 600 basis points. Where would you want your money to be the next 10 years? And we really think that investors have to look, like you said, to take some money off the table, with the extended growth stocks.
Speaking of the 10-year, let's take a look at that chart. It's been pretty quiet. I remember over last summer, that's all everyone was talking about was the yield curve and what was happening with the 10-year, but it sounds as if we've just been focused on stocks exclusively for the past couple of months.
Yeah, everybody last summer was talking about the inversion in the yield curve, and it was going to lead to a recession, and what are we going to do? Well, we obviously have seen a tremendous drop in yields. I think what's interesting, Jill, and this is going to go back to what we talked about in the first segment about the elections, is that we're beginning to see a lot of the markets quiet down. So if you look at a chart of the 10-year treasury, literally since April, except for a brief spike up, we've been trading sideways. And I do a lot of work looking at a lot of charts. We've had the same thing happen with the oil market. We've had the same thing happen with Bitcoin. It's only really been US and international equities that have continued to float higher, but I would not be surprised to see, and I call it going to sleep, where we've gone from a period of tremendous volatility to a period of literally nothing happening, and it could get possibly quite boring the next couple of months.
All right, let's wrap it up with oil here too. A little bit of an uptick since we spoke last, clearly with more people hitting the roads and an uptick in demand. So I think that's also going to be another COVID-19 play, and really will be focused around openings, reopenings, start stops.
Yeah, and one of the stories that I've been using about oil is, again, it's a supply demand situation. If you've got a factory that takes you 2.5 years to get up and running and build a product, and all of a sudden everybody else gets up and running and builds their product, then you have oversupply, and then you shut down your factory. That's essentially what's happened in the oil markets, where a lot of rigs have been taken offline, et cetera. You got to remember, it was only 2 weeks ago that Warren Buffett, everybody was saying, hey, what's Warren Buffett's next move? Well, guess what? It was in the energy sector, and it was a big move in a big way. So I think the real question in the back half of the year is, are we going to have some possible supply constraints? Because again, like you said, more economic activity, more people on the roads. We think the one thing that people are not looking forward to and not paying attention to is that a possible supply shock in the oil markets coming in 2021, where demand begins to outstrip supply and we see higher prices ahead.
All right, Chris, great to have you with us as always. Thanks for joining me on Trade Talks.
Thank you, Jill.
All right, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.